Our next guest, our next speaker at this Elliott Wave Hub event is Zac Mannes. Zac Mannes is a senior analyst at ElliottWaveTrader.net and one of its founding members. As the second analyst to join after Avi Gilbert, Zac now co-hosts the Stockwaves service with Garrett Patton and leads the Beginner's Circle webinar, helping traders to apply Elliott Wave analysis to U.S. stocks. Zac's topic today is the rotation playbook, identifying trade opportunities in banking, biotech, retail, utilities, and more. Welcome, Zachary.
Thank you, Jody. It's good to be back.
Yes, you've been on the Elliott Wave Hub event since the beginning. This is the 11th event.
Wow.
Yeah.
Fantastic.
Yeah. Let me just pause here and then you can get set up. Yeah, go ahead.
Okay. Oh, you'd think that by this point, I'd know how to start the PPT and share it on the Zoom at the same time, but
You do great.
thanks.
I'm pausing.
All right. Good morning, everybody. Welcome to this Elliott Wave Trader and Stockwaves presentation as part of the Elliott Wave Hub. It's good to be back. Today, we're going to talk a little bit about some of the opportunities that we see, but also how we approach looking for sector rotation opportunities, mostly within Stockwaves, and how we plan our wave setups accordingly. We'll focus on some opportunities that we see in the financial and biotech and retail utilities and more. But like I do often, it's really hard, when I know that we're doing an event that isn't meant for Elliott Wave traders, then we really start with the basics and we spend a lot more time on it. But I think most of your audience are pretty familiar with the basics in terms of motive waves and corrective waves, that we're looking for 5-wave patterns followed by corrective 3-wave patterns. And sometimes those can be to the upside and sometimes those can be to the downside. But that's the main crux of what Elliott Wave is looking for those fractal patterns that consist of 5 waves and 3-wave moves. And then we further delineate those into impulses and diagonals. Impulses are stronger trending moves that don't have any overlap, and all of the subwaves adhere to normal 5-wave structures, all of the motive subwaves, waves 1, 3, and 5. And the difference with that, between that and a diagonal, is a diagonal can have overlap, but also all 5 of the subwaves are going to be corrective ABC moves. And while sometimes those can be very frustrating to some traders, if you're attuned to the way that those move, sometimes they can give you more linear travel and multiple trade setups that have good, favorable risk-reward opportunities on each of their own legs. One of the major advancements that Avi Gilbert, the founder of ElliottWaveTrader.net, contributed to the Elliott Wave world was his analysis of what's called Fibonacci pinball. And this is the fractal nature of the subwaves, but he noticed a very specific Fibonacci extension play within those subwaves. So the Frost and Prechter book teaches us that the third wave is going to tend towards a 1382 or 1618 extension most of the time. But Avi started to notice that the wave 1 subwave within that would almost always stop around the 382, the 0.50, or the 0.618 fib extension. Then we could apply normal fibs for that subwave 2. Then the third wave would go either to the 100% or maybe the 123.6% extension, then normal guideline fibs for our 4th wave inside that 3, and then the 5th of wave 3 would head towards that 1382 or 1618. And we started to notice with such regularity this occurring, that it really helps us when we're analyzing what we think is going to happen in our Elliott Wave projections. If we're not getting 5 waves up into this initial fib zone for the resistance for wave 1, and we start to see other structure or start to go past that, then it really starts having us question whether or not that's actually a third wave, and maybe this was an A wave and a B wave, and we're just filling out something more muted like a C wave instead. Or if we surpass that or get to the 618, but is only 3 waves up, then we immediately start thinking, okay, this isn't a pure impulse. Maybe this is an A wave in the wave 3 of a diagonal. So that's how we use Fibonacci pinball at multiple degrees to help us along in our wave counts and identifying setups. We also place a lot of emphasis on using the preferred nomenclature and looking at things from a fractal standpoint and seeing that each segment of an Elliott wave pattern is going to be comprised of the normal subwave pattern that we'd expect. And then within that, looking for the subwaves as well. And then even within that, looking for the subwave agreement. And if at any point we're getting subwave structure that doesn't match with what we think we should be seeing, particularly if we're approaching something as an impulse, then it has us starting to look and reevaluate. And we might get to it. I don't know if I have time to get to one of those examples, but one of the stocks that we've been following very closely for the number of months now, MP, there was a moment where it just started to falter a little bit more than ideal as it should have been. It immediately alerted us to the potential that it might be morphing into a diagonal as opposed to a pure impulse, and we were allowed to make some favorable adjustments. So we do focus a lot on education. We have a very extensive free education section at elliottwavetrader.net. Encourage you to take a screen grab, and you can go check that out later. And I'll leave this up, and I can put this screen up again at the end. This is a chart from Garrett that I think is important to start with in terms of just a much larger overall context. I mean, certainly things can continue to extend, and I think the expression is that the market can remain irrational longer than you can stay solvent. But in the grand scheme of things, we like to look at context a lot. And in the context of larger degrees in Elliott Wave, Elliott Wave formed back here in the 1930s when R.N. Elliott was identifying the start of a supercycle degree wave 3 coming off of the Great Depression lows. And he predicted at the time a 70-year bull market. We've extended past that. But as you can see, we do have all of the necessary subwaves in many, many degrees that can fill out as being completed for a cycle degree 1, 2, 3, 4, 5 subwaves. Inside that cycle degree 5th, off of the 2009 low, we can count a primary 1, 2, 3, 4, and 5 waves up. We are at higher highs. Even if you were to make this the primary wave 3, then we can, that might give us a little bit more room for further extension. But we're hitting some decent fib resistance. Have very proportional waves, even though this is a very extended move. So we are very, very concerned about the potential topping process that we find ourselves in at a larger degree. But with regard to what we expect for this supercycle degree wave 4, we know that Elliott Wave tells us that there should be alternation for this degree wave 4 based on the wave 2 from the Great Depression. And that was a very, very sharp, abrupt, deep retrace. So there are a number of ways that Elliott Wave can alternate, and they don't have to all be present. But one of the ways that this 4 could differ is it could be far more shallow relative to standard expectations or guidelines for that 4th wave, and just be wider and take longer time since this was so quick. So those are 2 different ways that it could alternate. Also, instead of this being a sharp, quick zigzag down, it's possible that this could be a wider flat and possibly even an expanded flat where the B wave inside this 4th wave even makes higher highs. And so there's some things, nuances that we look at between the different sectors that hint at which sectors might possibly be able to make that higher high. But anything that we're looking at from a long investment standpoint in this region is very carefully considering the risk skew of where we are in terms of a potential top, So we're not really looking so much at longer term swing moves like we were off of the COVID lows or from back in the early 2013 region and stuff when Stockwaves first started. We're looking for shorter plays, but just that next swing move, but identifying support and then seeing what has favorable risk reward off of that support for any consolidation that we do get. One of the things that we focus on a lot in Stockwaves is our wave setups. We're providing ongoing analysis, Elliott Wave analysis, as opposed to specific trade setups. So, but we have tried to adapt our ongoing analysis in a way that lays out some very clear parameters for a tradable move. Sometimes the invalidation level that we select for a wave setup might not be the pure Elliott Wave invalidation level, but utilizes probability to give a more favorable risk reward. We also have a symbol request. We post nightly videos on Mondays, Tuesdays, and Wednesdays. On Thursdays, we have a weekly webinar. And then we post a number of special updates, including articles from our very own Lynn Alden. And then we also take a look at things on the day of earnings, either things that are reporting after market closes or before the market opens the next day, to see how that earnings announcement can potentially accelerate and act as a catalyst for whatever Elliott Wave pattern we are seeing, potentially sometimes skipping moves at a very small degree. So I mentioned the special updates, and this is one that we put out at the beginning of April, on April 7th, as we were noticing a three-wave move down completing in the broad market. The broad market is not the main focus of analysis in Stockwaves. We try to focus on sectors and on the individual stocks, but we do look at the RSP, which we'll look at in a minute. Which is a more equal weight version of the S&P. We were at least coming into some temporary support due for a potentially significant bounce. And there were some things that did still show promise of making new all-time highs. And so I put out this special update asking, how is one more high even possible? It seemed at the beginning of April, we were starting to break down some key support and had a pretty rough start to the beginning of April, but that was completing a three-wave move down. And one of the things, so we posted basically two lists, and then we added in the webinar that I did the next day, added a few other names to both of these lists. But one was ETFs and individual stocks that had a good chance of making new highs over their February or March highs that were already made. And the next list was things that might eventually be good short targets, but that were due for more significant bounces. And one of the things that I talked about a lot in this post and in the webinar that followed was that some of the things in that list too that might only be getting corrective bounces could easily be getting larger percentage moves than some of the things in the first list that might only get the first leg of a possible move to new highs. But I highlighted a couple of things here that I want to take a look at in this webinar before we get onto the opportunities that we see going forward. So a couple of the ETFs that I'm going to highlight here are XLU and XLI. As well as XLY and IHI as a healthcare, and then the retail and communications, and then a couple of individual stocks that we zeroed in on as well for our wave setups. Our wave setups get posted in our room, but also go to a table. It's a dynamic table, which is sortable. So you can sort by initial setup. There's also a few other columns that I excluded off of here that have updates. When they get to a resistance level, we post an official update. But here's a couple of those that I wanted to pick out and go into in a little bit more detail. Were posted early in April, and then a little bit later in April when we had a nice retest of a retrace to support. Those are CAMT, BLK, CPA, AMD, and IBKR. So a quick look back at what we are seeing into that low in April. On April 7th, we saw this corrective ABC down, even though this was a very violent drop as the third, because this started very clearly as a corrective move down, and we were hitting normal fib resistance regions for extensions as a C wave, and could count that as 5 waves down. We were looking for a pretty healthy bounce at the very least, and then there were a number of charts where this could still count as a 4th wave and allow for an ABC move up to wave 5. And I try and when I present things, particularly with when I do show an alt, which I try to limit as much as possible, I look for where the overlap is potentially going to be in that alternate count, as well as just getting members to focus on the most immediate and prudent move that makes the most sense from a risk-reward standpoint. So if we were going to be getting a 5th wave up as the green wave 5 to new highs, we knew that that was going to be an A, B, and a C wave move in a larger diagonal, and that the A wave was probably going to head to the same resistance region as a corrective bounce for a B wave, and that it was also going to be an ABC move up. So the way that I approached this for many of these charts was saying there's really no difference right now in which of these counts you lean to, whether you're looking for just a big bounce and then a move down to new lows, and this is a more significant top, or if we're looking for just the start of a move up to new highs. And we'll see which of those index ETFs leaned which way and which individual stocks leaned which way. But the bottom line was, yes, there's a more bullish count that goes to new all-time highs, but the structure up to this point was identical. And then once you get this filling out into resistance, then you can evaluate, do I want to rely on some support for a B wave to hold and then head higher? Or do I want to make adjustments and play more defense and wait and see if I'm going to get a possible impulsive start to that more bearish C wave, or a clearly corrective start that looks like it is going to be holding as a green B wave. So a couple of those individual ETFs that we highlighted, also from April 7th, XLI looked a lot more like the 4th wave in that diagonal. It should get an ABC up to new highs as a 5th. XLY could have gotten a little bit deeper, but as a 4th wave, which was the ideal count there, it was in the support region that should hold as the 4th wave of a diagonal. So that was ideally going to get an A wave up and then hold a B wave on its way to new highs. But again, the alternate, if that was a more bearish, it was only going to get a more bearish bounce, that A wave could be the more bearish yellow B wave alternate. XLC from the same day also, or this was from the webinar on April 8th, more probable that this was the start of an even bigger 4th wave, but we were into the normal support zone, so there was a potential that that was all of the wave 4 in green. But again, it doesn't really matter because we're looking for the same bounce into resistance region as an ABC move, whether that's the B wave in a wider and deeper 4, or whether that's the A wave in the start to wave 5. XLU as well, room for a little bit lower because of the way that this could count as the B wave here in a 1-2. This could have been a 4th and get a 5th wave down closer to the 70 region on April 8th. But again, this one holding as a 4th wave into support, looking for what should be an ABC up in a diagonal as the 5th wave of a diagonal to one more high. And XRT was probably one of the more bearish charts that we had identified at that time, looking much more like 5 waves down into the April lows off of the 2024 December high as a B wave top. But we were looking for a similar ABC bounce, not as a B wave here, but as a normal wave 2, even in what we considered one of the most bearish potential ETFs. And then lastly, in terms of those early April charts, another more bearish potential chart was the IHI, a healthcare ETF that also looked like a possible, this was a little bit ambiguous in terms of 5 waves down, easily an A, B, and a C for wave 1 of a diagonal. And if that was the case, they was looking for an even bigger and wider bounce as wave 2. So this could be present itself as a very nice reversal candidate for a big bounce, and then eventually developing into a potential short setup. So fast forward to yesterday evening or today, and we see that we did in fact fill out a nice ABC move up into past that 618 resistance. We actually got past the 786 and all the way up to even past an 88.7. So it does make the RSP lean far more heavily to our green, more bullish count, but that does rely on it holding support as an ABC corrective retrace for the B wave. Technically, it's still valid as the B wave in the start of a more bearish move, but since we cleared the more significant resistance, the 618 and the 786, and even got over that 88.7, it's much less reliable as a bearish B wave topping, even though it is at a lower high relative to November, December. So looking for this to hold support, and then we'll be looking for names and sectors that more clearly show like they're holding that similar support, looking for yet another move into higher highs, possibly even into 2026, depending on how long it takes to get down in our B wave. XLI actually has already made a new nominal high over the high from 2024 as the wave 3. So in Elliott wave terms, this can still be our A wave of the bigger fifth of the C wave, which has confluence at larger degrees up here towards the 170 region. But because we do have our 3-wave move up over the previous wave 3 high, there is a risk that this is just all of the fifth of the parentheses wave C topping this primary wave 5 here. So this will be, while we can look for the potential for it to hold that corrective support and then look for that swing move up in the XLI industrial sector, there is more concern that we should not be relying on a retrace into this support zone from right here. And so adjustments should be made, maybe tightening up stops at higher support levels, maybe selling into some covered call strategies, or just trimming positions altogether and looking for that clear ABC consolidation to fill out before looking to re-enter for yet another swing higher. XLY did not get nearly as high relative to some of those other ETFs or the RSP. Similar ABC up did fill out into the region that we were looking for, perfectly fits proportionate wise as the A wave inside the wave 5 that we're looking for. Does still run the risk of a B wave as some other things, but looking again here for an ABC consolidation into our normal fib support zone to set up for a new swing higher. XLC also similar to XLI that we looked at. It has a nominal higher high, not quite as high as the XLI chart, but it too runs the risk of being all of our parentheses wave 5 being over the wave 3 already. And if we are in the A wave of our bigger wave 5 up, then we should be looking for that ABC into support into the mid to low 90s to set up a new swing. This one, because it's a wider flat for a wave 4 at a smaller degree and not yet the start of a potentially bigger retrace unless it was that yellow wave 5, is still valid even at a higher high for a B wave, because we know that B waves can make higher highs, nominal higher highs in expanded flats. So that is also still a valid structure. And if we instead filled out 5 waves down for a C wave and maybe started as a clear 5 waves down and a 3-wave bounce as a 1-2 start, we could short that for the rest of the C wave, and then that could be a long opportunity from there. But right now, we're just looking for indications of the start of that larger retrace potential. XLU was another one of the names that we were looking for an ABC up to a higher high. It did also get nominal higher highs as well, but has already started to fade a little bit more from there and might be ahead of some other things in terms of its B wave retrace. Room for a little bit more consolidation and bounce as this smaller degree B wave inside of that B, but can fill out 5 waves down into our 77 to 75 region would be the most ideal to set up another swing targeting the 90 region. And then XRT was that most bearish potential count, most bearish potential sector that we had identified, looking like 5 waves down in the wave 1 of a larger C wave. And it has gotten over ideal resistance. It got over the 76.4% fib retrace, but has still held a lower high and can count as an ABC up, and 5 waves up in that C wave. If it can hold there under the 81 region, then we can potentially look for a 5 wave down start inside that wave 1 of the third. Or if we see it clearly looking like it's more corrective, then perhaps this was just an extended fourth, and we're going to get a swing up to new highs there as well. And similarly on IHI, whether we're counting this as 5 waves down or as an ABC, we have a nice A, B, and 1, 2, 3, 4, 5 waves up, even if it truncated for the C wave of wave 2, a little bit past that 764, but holding at a lower high. So more bearish potential exists here. We're looking for some initial signs of a possible 5 wave down and 3 wave start, 3 wave bounce as an initial start off of that high in a potential more bearish pattern. So now I wanted to take a look at some of the wave setups that we posted early on in April and how those evolved, and then we'll get into some of the additional opportunities that we see. So this is CAMT that I mentioned before. So this was from April 9th. This is the format of our wave setups. So we're going to share a chart showing what our expectations are from the Elliott Wave standpoint and give a blurb about what we think we're looking for. So here's one where we're looking for only a corrective bounce targeting that ideal 618, 382 to 50% to 618 is the more ideal fib, as a bigger ABC bounce. So we posted this as a shorter term wave setup, initially just looking for the A wave of that move into the 70, the 69 region. And then allowing for a retrace and then a move up for more of that B wave. And then we fast forward. So we can see that all of our wave setups have this nice table, and that goes to the actual wave setups table on the separate page. It identifies whether it's along, it shows the ideal support region, an invalidation level, which as we said is not always the exact invalidation level from a pure Elliott Wave standpoint, but is meant as a more practical tradable application of that. We identify the next resistance region, and once we reach that resistance region, here it was 58, so about where the A wave, inside that A wave topped. So once we take out that resistance, then we're prompted to do an official update, and in those updates we evaluate any changes to the Elliott Wave pattern, how it's evolving, and usually raise the setup, the support and invalidation levels, and assign a new resistance. Or if it happens to be a short, then we'll lower those levels. But and then we give a time component. We separate our wave setups into W wave setups, which are meant to take multiple weeks, M wave setups, which are meant to take multiple months, and sometimes Y wave setups that are meant to take at least a year or longer. Probably not so many that we really anticipate are many multiples of years. So fast forwarding to a recent chart on CAMT, we can see that we filled out the rest of that C wave up for the A wave, held a nice shallow consolidation for the B wave, and then are completing 5 waves up into that ideal 618 retrace at the 92.33 region. It does have a decent high over the wave 3, so it does not need to hit that level exactly. Fibs sometimes work that way, and then it spoils us, and we start to expect that they're magic exact numbers. They're meant to be regions. So, you know, we're in that region of the 618. So decent time to start tightening up stops and planning for exits on that CAMT trade. BLK was one of the financials that exemplified the XLF ETF that we were looking at for an ABC up as the wave 5 the most. But identifying here, there was the potential that this was going to get a similar B wave that some of the more bearish charts were looking for, but the same ABC structure should apply to both of those. So that was the initial target region for the wave setup, to get just that first part of the A wave into the 950s. Initial resistance was set up as 880, where the A wave of an ABC move up for that A wave should go. Invalidation at the recent lows in the allowing for that possible one more drop down into the lower 700s. And then the support, ideal support, holding the recent low at 790s. And BLK has actually made a nominal higher high. Still ideally just the A wave of our fifth of wave C, but a nice 30% move off of that initial wave setup. And now we're looking for consolidation into the support region as the B wave, like we should see on many other charts, to set up the next swing targeting the 1300 region. The next wave setup that I wanted to highlight was our April 11th wave setup on CPA. I actually like a number of things in the jets and travel category. CPA, I think, is an airport stock, not an airline itself, but it seemed to have similar structure as an A wave. It actually filled out a nice triangle for the B wave in a similar structure that we were looking at in Delta and in UAL. This is actually inside a larger intermediate degree wave 3 of a very big diagonal. So here we're looking for a potential impulsive move to get 5 waves up as the wave 1, or because it's a C wave, we knew that this could also be an ABC up for wave 1, because C waves, even inside diagonals, can themselves be diagonals. But we're looking for a similar move to many of the bounces that we were looking for as just the wave 1 inside that C wave. Now, we used for a target, we did this as a more intermediate M term, and we used the target as 170, looking for more of that larger C wave. And that shows up on the daily chart that was posted with the wave setup as well. But what I wanted to show here was the initial move that we were looking for, and how that coincided with many of the bounces that we were looking for into the 100 to 115 region as that initial resistance. And fast forward to current day, we can see a possible 5 waves up completing into that 110 to 115 region as our wave 1 in the wave C, and other things that might be getting a B wave retrace in their larger fifths. This can just be getting a wave 2 retrace soon. Room for a little bit more of a pop towards the 115s, but then should fill out a nice ABC retrace into our magical Fibonacci support zone. And I know I might be running through some of these a little bit fast, but I like to leave a lot of opportunities for questions, and have quite a number of slides that we can also look at as well. So here's another one from the corrective bounce basket. And this was AMD, which actually had been a short from October 2024, looking for more of this C wave of the bigger degree A wave to the downside. And when we saw this bottoming in April, we tightened up our support and invalidation levels to effectively force an exit on the short side. And then into April 22nd, when we saw a nice reversal off the low and a corrective retrace into ideal Fibonacci support as the AB structure inside what was ideally just going to be an A wave of a bigger primary degree B wave bounce. Posted this as a wave setup, initially targeting the 131 region for more of that ideal B wave bounce, with an initial resistance into the 100% fib extension for the C wave of the intermediate A in that wave setup. And fast forward to today, we have filled out more of a larger ABC up into the 150 region as the 618 retrace. It is still possible that this might have just been the A wave, and this is a B wave at the larger degree. and that needs one more push up holding here, or even that this is still an A wave and we're going to hold as a B wave, a deep B wave and a much wider flat. But it's more prudent to just count this as most of the B wave complete and then look and see, does it give us a clear impulsive 5-wave move down start, which we do have a very, very small degree potential 5-wave move down off of that recent high. But does it give us something bigger that we can identify as the larger wave 1 of a primary C wave starting? Or does it look more corrective in nature, in which case we can start to look for a possible move up into the next fib beyond that 618 for a wider and higher version of that primary degree B wave. And the last of the wave setups that I wanted to look at before we look at a couple other charts was IBKR. And here's another one where from our list where we identified the potential for this to be starting a bigger 5th wave up to new all-time highs as the 5th wave of a larger primary degree wave 3. But into mid-April, when we had a lot of things that had an initial move up as an A wave and were holding support as a B wave and trying to start C waves and what could have been corrective B wave bounces, said, maybe it's possible that this was a 1-2 already. But ideally, this can just be the A wave and the B wave, and we can be looking for the C wave up in a bigger wave 1 of an ending diagonal. So we put the target as 260, which is where even if this was, we're getting a 3rd wave to just a nominal new high as 1, 2, and 3, or an A, B, C, like some of the other financial charts, would target that 260 region, and then gave it the support and invalidation in the 150s. And we're looking for a move up into the 200 region as the initial resistance for that C wave of wave 1. Fast forwarding today, almost have a new higher high, but it stopped just a little bit shy. So certainly still can be only the wave 1 of a bigger ending diagonal. Might push things even a little bit higher past the 90s for IBKR. But what we do have to be a little bit more careful about is that 1-2 that we had looked at before, and where this is a 3, maybe it stretches a little bit higher to a nominal higher high, and then holds a 4th and a 5th in a more muted version of this 5th of the primary wave 3 to just slightly higher than the intermediate degree wave 3. But if we can break down under that 50 region of support for the possible yellow wave 4 and get more of a nice ABC move down into the mid to lower 40s, then we have a nice healthy setup for the rest of that ending diagonal potential off of that low. XLF in general, we looked at a couple of those financials. So here matches what we're looking at on the RSP. And as we've talked about on some of those charts, the fact that we do have nominal higher highs over February, March for the wave 3 does put some of these at risk of being all of the 5th wave as a more muted ABC up for all of the wave 5 that we noted in yellow. But we're looking really for an ABC retrace to hold. And if we get something that looks more aggressive than this, then we'll only look for a corrective bounce and then opportunities to short within that sector. But many of these do look like they are coming into a local top, and we're identifying that ideal fib support region, which here on XLF was going to take us down to the 4850, down to the 4570 region to be the most ideal B wave retrace. In the biotech sector, again, this is similar to the IHI that we looked at before, but a little bit weaker of a move in terms of the bounce. The similar ABC structure up that we've been looking at on many of these charts, but holding right now in the region of the 618, room for more of this C wave to extend, even possibly as another 4th and a 5th wave up into the 132 to 139 region. But do like the fact if we're looking for things that are potentially more bearish to be candidates for shorts, we're going to start looking at some of the key holdings within IBB and seeing which ones line up most with the potential for this to be a bearish top forming and looking for the at least measured moves, or pirate ninjas, as I like to say, or actually playing some of these as third waves in larger C waves, or even IBB itself as a bearish wave setup once that starts to confirm a potential top. XLU, as we talked about before we looked at this chart, ideally holding a corrected bounce ahead of schedule for many of the other names that might only just be topping in their equivalent A waves of the wave 5, might come into support sooner and be one of the earlier names that we can start looking for layering into the potential for that swing move off of support in the mid to high 70s. So room for more of a consolidation and bounce first is that B wave, but then we'll be looking for signs of 5 waves filling out into our support zone to complete that ABC move down for the B wave in utilities. And again, on our Thursday webinars, a lot of times what Garrett and I like to do is taking one sector ETF and then looking at many of the key holdings, not necessarily all of the highest weighted ones, but some of the ones that are more actively traded and that match up or show significant differences and nuances relative to that sector. XRT, as we said, holding a lower high as the potential wave 2. So again, another one that has the more bearish potential. If we can see an initial 5-wave move down start and a 3-wave bounce, that might be the 1-2 start to wave 1 of that third, then we might be able to look for new short opportunities either in this sector as a whole or at some of the individual names within that sector, using the recent lower high as a key level of support and invalidation for anything more bearish. Jody, do you see any questions that would be beneficial to take a look at now before we jump into
There's, what are you going to jump into now?
Oh, there's a request to look at GC and GDX.
Right.
Yeah, let me look at show a couple other charts. If there are any questions, that was most of the content that I wanted to get through and wanted to make sure that I left a good 10 or 15 minutes to address some questions. But we'll pull up and take a look at a couple of other things, and then maybe we can look at the gold and silver charts. So this was a look back at that AMD chart I mentioned back from October 2024 that we posted it as a short setup and filled out. It actually filled out better as the purple alt, getting 5 waves down instead of an ABC for the wave 3. So counting this as the cycle degree A wave high and then the A wave down here. But now we've already filled out most of the B wave that we were looking for from that potential, and can be trying to start that bigger C wave to the downside. And this is that MP chart that I mentioned. And I did a nice article write-up on the evolution of this wave setup. So we posted it initially back in December, and at the time noted that the ideal path or the more prudent path would be to expect only a B wave bounce and then the C wave of a wider flat, but that we had reached a 50% retrace that could possibly count. I know it's kind of overlapping here on the image, but there's a parentheses green wave 2 here, where if we started to see more of a 5-wave move up and 3-wave retrace as a 1-2 start to this wave 1, then we could easily be far more bullish on that MP chart and make adjustments for keeping that wave setup intact for the more longer term, as opposed to just looking initially for that targeted B wave bounce. All right, let me switch over to a chart window, and then we can take a look at gold. There we go. Right. So there was still a chance that gold can hold in the very short term and try for more of this wave 2 bounce. But what we talked about a lot yesterday, Garrett and I also run the metals mining and agriculture service at EWT. It's set up as a very similar mirror to the way that we run Stockwaves. It has the wave setups as well. We also look at earnings there. But Stockwaves members get a very generous 25% discount when they sign up for MMA along with their Stockwaves subscription. And we do the first Monday of every month, we do a big webinar, and then we also do videos on Mondays as well. And I post a morning update. And so what we've been watching is the potential for the start of a C wave down off of the June high. And we have a possible 5-wave move down for wave 1 of that C wave. What could get forced as 5 waves up, but I think is just a slight extension of the C wave in an ABC bounce. They came just shy of a 618 and starting to break under more reliable support for the potential for that wave 2 to be slightly wider and higher as a flat. So this is not the most impulsive looking start to wave 1 of the third. But we can also count this as an A and a B wave and a C wave down for wave 1, making this larger C a diagonal itself. So instead of getting 1, 2, 3, 4, 5 subwaves inside the third, we could get more of an A, B, and a C wave move. So that's how that is evolving. GDX has a little bit more bullish potential in the short term, but because of the potential that we see for more pressure coming from this larger 4th wave, whether we're just going to fill out a C wave down and that's going to stretch a little bit into the 2900s to 2800s and more easily be counted as all of the wave 4, or we're going to need another bounce as a B wave and then another C wave down lower. That remains to be seen. That's again how we look for the overlap in that structure. We'll be looking for the difference between an ABC up that'll look more like a B wave versus 5 waves up that would look more like wave 1 of the green parentheses wave 5 starting. But we're looking for a move down into this support region next, as long as we stay under that resistance, even if we get the wider flat. And because of this structure, there's a number of things that we're a little bit more concerned about in the shorter term in the miners themselves, certainly GDX and other things. Things that are a little bit smaller cap and more related to silver do look like they might have potential for a little bit more extension first before getting some consolidation, and that consolidation can actually be a little bit more mild than this. One of the things that we look at a lot is the gold to silver ratio. And we have a possible 5-wave move down off of this B wave. It's a little bit less orthodox, needing to count as a WXY for that B wave top in the gold to silver ratio. So there is some risk of an attempt at one more high as the 5th wave of wave C. But we can be starting a move down in the ratio. That doesn't mean that gold has to drop and silver goes up, but it does mean that silver would be performing better relative to gold for some time into the future, whether that just means more mild consolidations whenever gold is consolidating, or a little bit more extension to the upside whenever gold is bouncing. Ratios can work in a number of different ways, but this does imply, if we're going to apply an Elliott wave count to it, that we can see some continued strength in silver relative to gold. Also, many of you who might be following me on X, on Twitter, formerly Twitter, will know I'm pretty bullish longer term on Tesla. Even if I'm a little bit more hesitant on a number of other things in the equity sector, Got a little bit deeper than ideal here for the B wave, whether this is the B wave inside the fifth wave of a bit better wave one of our C wave of three, or whether we're already starting the A wave of wave three in a diagonal for the C wave inside the larger diagonal. I like the structure a lot off of the April lows, and again off of the June lows into our robo-taxi event that we're looking for a pop. We got a little bit more of a fade than ideal because somebody keeps running their mouth when maybe they should just focus on SpaceX and Tesla and other things, but still looking pretty good overall. So liking that structure a lot. And that's pretty much it that I have to talk about for now, Jody.
All right, you have a few questions.
Great.
Speaking of metals, before perspective on NAC.
On
NAC, N-A-K.
NAK?
That's what
I don't know
they
if I've
said.
updated the chart in a while. It's not, I try to avoid charts that continually break previous possible setups and have really shaky price data. So sometimes I'll draw a support line and say, all right, this is key support. If it's going to hold that, if you're bullish for other reasons, that's great. But this is one that I'm really not such a fan of. I like the platinum chart a lot. But it is due for some consolidation as a fourth wave, most likely topped in the third of a larger C of a bigger A wave. Could even have been all of that wave C, but I'd love to see another fourth and a fifth. In this possible 4 and 5 of a bigger C wave also lines up nicely with some potential in silver as well. Silver has a little bit more room in the very, very near term to get another extension to a slight higher high, but showing a little bit of weakness with that retrace that we saw in the purple that we were looking at for that wider wave 2 bounce in gold. Really need silver to hold 3630s to get that one more push up into the high 38s, low 39 region for one more high before it is due for a similar fourth wave like platinum.
Okay, and there's another question. This year's general commentary has been energy positive potential. Please comment on the new mindset on energy. Do you have any charts to show?
We are long-term bullish on energy, but it's very possible that most of the energy stocks have filled out 5 waves up off of their 2020 lows. Some can count as an alt wave 4 here. Most are looking like they've already started a bigger bounce, but they might need a fade and then more of a B wave, and then they're going to need a bigger C wave of a primary degree wave 2. If this was a wider flat 4, which some are still valid, then it can get a higher high. But again, if this is initial move off the low, we're going to need to hold some support. There are a number of names that we track that look more like this was a possible ABC up, or maybe even 5 waves up into the 2022 high, and they can count as a larger ABC already completing. But we don't have quite all the same look for a lot of energy stocks that we did back here in the fall of 2020 when we were incredibly bullish on a lot of those names. So there's still a lot where we are highlighting the opportunities for the ones that look like they're trying to set up to get a 5th wave up as an alt to one more high, but a lot more are starting to look more like they're just getting corrective consolidation before trying to set up for lower. Ultimately, that's still a very, very bullish primary degree wave 1 and wave 2, or maybe an A and a B wave, but we don't think it's done yet. So we've identified a couple of the names that look like this might have been a more significant bottom. Some of the things that we are a little bit more immediately bullish are some of the natural gas names. But we are on the lookout, and there's even a number of energy names where this can look like a 4th wave bounce and get a nominal lower low instead of holding as a B wave inside this B wave bounce.
Okay, great. And then somebody is asking, are there any stocks that Elliott wave theory isn't good for? So,
Elliott Wave is an analysis of sentiment. So if you have something that is very, very thinly traded, then you aren't going to have such good price data to give you decent wave structure, and it's not a very good sampling of sentiment. If it's an obscure, tiny biotech that is the two doctors from Hopkins labs that isolated a protein, and the administrators and the attorneys that spun off an IPO just to make a quick $5 million for the university, and there's zero liquidity and no activity in the stock. If you really think that there's potential for that protein to have applications, then because you've studied the science, then that's great. But it's not going to have a good chart that we can analyze from an Elliott wave standpoint.
good answer. All right. Are there any other questions for Zac? Anything else? No.
All
Okay,
right.
Zac. As always, thank you so much. Great
Thank you, Jody. My
presentation.
pleasure.
And I'll stop the recording now.